Good afternoon, everyone. My name is Lauren Simpson. Just give me a couple of seconds while I share my screen with you. Thank you for joining us today. Hopefully, I'm not scaring anyone with all the windows that are open on my screen right now.
Or we just see the community navigator screen right now.
Oh, can you not see the full slideshow?
Yeah, we see our PowerPoint presentation. There you go.
Okay, perfect. All right, so good afternoon, everyone. Again, my name is Lauren Simpson. I'm with the SBDC, or the Small Business Development Center. And we have changed things up this week with regards to this session with small business Q&A and other funding updates and tax credits. We would like to welcome you to a new edition. It is called, it's a new event through the Community Navigator pilot, which you can see in front of your screen, on your screen, right now. And it's the Community Navigator pilot program and the U.S. Pan-Asian American Chamber of Commerce. And so we're bringing to you content specifically for those audiences, as well as everyone else who's joined us today. When I finish my intro, I'm going to go ahead and drop a link into the chat so that you can find out more information. But again, it's a new program and we're excited to share it with you today. And now my functions aren't working. I'm sorry, everyone. Let's try this again. My technology is going crazy today. I'm not sure what's up. Mike, can you see my screen again?
Yes, we do see the screen.
All right. So again, I am coming to you from the Los Angeles Regional SBDC, or the Small Business Development Center. We have over 1,000 locations throughout the country. That means that regardless of whatever state you might be in, you should be able to get connected with a local SBDC office. And you'll want to do so because we offer no-cost services for local small businesses, and they're at no cost to you because your taxes have already taken care of all of our fees. So you might as well partake in our resources. For the Los Angeles area, we cover the Los Angeles County as well as Santa Barbara and Ventura counties. And you can see those locations represented on the screen in front of you. We have centers, in Camarillo over to Santa Clarita. Then you go across to Pasadena down to Long Beach. So we have centers in those areas that I mentioned as well as in between. So again, please be sure to get in contact with us. Here's a deeper dive as to what it is that we provide. No cost business advising and virtual trainings. When it comes to the business advising, you're able to get connected with business experts such as Mike DiDonato and GB Bajaj, as well as other experts in marketing, business planning, you name it, whatever your business might need, we have resources for you. And again, with regards to the virtual trainings, they are comprehensive workshops, much like what you are attending today. Please get in contact with us to get started. For those of you that are in the Los Angeles area, we can be reached at 866-588-7232, or you can reach out to us online at smallbizla.org/new client. For those of you outside of the Los Angeles area, please go to americassbdc.org/find-your-SBDC. And then Mike, really quick housekeeping notes for those of you who have questions, please put those into our Q&A. Again, all questions into the Q&A. The chat will be reserved for helpful resources and links that Mike and GB, would like to provide for you. I don't know what is happening today.
It's okay.
I'm like jumbling everything.
It's okay.
And again, the California Dream Fund is still going on. We are accepting registrations. So please be sure to check the chat for a link that I'll put in for that information. And I'm going to hand it over to you, Mike. Thank you.
Great. A few more housekeeping points. Somebody's already asking, are you going to email a copy of the presentation? I think you have to write to Lauren to get the recording. So Lauren will put her email in chat room. Please keep the questions to the topic of the day. We're going to be covering legal structure and regulatory filings. If the question is outside of the topic, we'll be directing to a professional advisor, an SPDC advisor, et cetera. And once again, please put the questions in the Q&A. GB is not feeling his best today, unfortunately. So I'll be doing much of the talking, and I'll be grabbing GB in as needed. Okay, so let me go ahead and share my screen. Last week, we talked about legal structures. We're going to go through this briefly. Again, we talked about the pros and cons of various types of legal structures. This week, we'll be talking about various portals that you can go to file for regulatory submissions. But briefly, on the left-hand side of the screen, you see the various types of legal structures that I talked about last week. There's other legal structures. There's legal structures such as trusts and workers' co-ops. And we don't typically see those types of entities when we talk to clients through the SBDC. I will ask GB that question. I'm sure you're dealing with trust, but are you seeing co-ops, GB?
I do see co-ops periodically, especially in the cannabis industry.
Yeah, right. So please keep in mind, as GB has mentioned so many times before, legal structure, legal status is defined by the states, by the state of California. Tax structure is defined by the IRS. Please keep that in mind as we go through these examples, because when you set up an entity, either by default or by choice, you will be established on a particular tax structure. So sole proprietors file a Schedule C at the end of the year, which is profit or loss for a business. LLCs file informational returns to the IRS, and the profit and loss from the business flows directly to their tax returns. They also have to pay a fee for the privilege of doing business in the state of California. Corporations, also, depending on the corporation, it's either going to be passed through or not passed through. Nonprofits, unless they engage in a profit activity, do not have to pay taxes. S corporations are pass-through entities, as well as all these other entities if they elect subchapter S tax status. We're going to be going through that in a minute. Partnerships are also pass-through entities. So I'm going to move on from there. We already talked about the disadvantage of a sole proprietorship. You're subject to unlimited personal liability. So the question I often get is, when should I move away from a sole proprietorship? In my opinion, it's based upon your risk, because you're subject to unlimited personal liability. It's not necessarily tied to how much revenue you generate. There might be some tax considerations, but GB in general, would you agree with that statement?
Absolutely. We always take a look at the client's general liability, their umbrella policy, their property insurance. But
Right.
the tax implication can be much greater than the legal implication in a sole proprietorship.
Right. Thank you. So LLCs are formed through something called Articles of Incorporation. I went through this last week. That's why I'm going through this pretty quickly. LLCs give you a level of protection. There's all sorts of flexibility associated with LLCs. There's no restrictions on the number of members. Members are owners. There's many flexible ways to run the business. When you have an LLC, you don't have to have a board of directors. It does enjoy pass-through taxation, and you can elect subchapter S tax treatment, which may help you save on taxes. So there's very little restrictions or limitations on LLCs. All types of members. You can have differing financial ownership interests similar to preferred stock, which is not true of S Corps, and managed much less informally. These are the fees charged by the state of California. And as you level up your gross receipts, your fee levels up with the state of California. Now, in the first year of formation, unless it's changed, GB, there's no longer a payment due to the state of California for the formation of an LLC or corporation. Is that still true?
It's only true as long as your revenue is below $250,000, because if you increase, if you go beyond the $250,000, then the fee kicks in. So it's only
Okay.
for small businesses, yeah.
Yep, right. Okay, but it starts to become due in the second year of formation, and it's due by like April 15th. I like to get it paid by March 15th. That's when corporate returns are due. So there are certain professions which cannot form LLCs. Most of them have to do with medical professions, accountants, CPAs like GB, engineers, architects. Check with your board to determine whether or not you're eligible to form an LLC. And again, I'm going to do this quickly because we went through it last week. Pass-through taxation for LLCs, you have to pay self-employment taxes for the profit generated by the business. If you elect Subchapter S tax treatment, and you can, then there's a possibility you might save on taxes, unless you see GB and you see something else associated with the way you have your taxes structured. You can form a general stock corporation, a professional corporation, a closed corporation, a B corporation, a special purpose corporation, and elect Subchapter S tax treatment. And you can do so with an LLC. Is that also true for a partnership, GB?
Yes.
All right. And so you get pass-through taxation, you avoid double taxation. There are certain restrictions. You can only have 100 shareholders. There's a limit on the types of members, the types of shareholders. And you cannot have preferred stock if you have a Subchapter S corporation. Subchapter S refers to an internal revenue code. When you have a Subchapter S corporation, as GB has told us so many times before, you must take a reasonable salary. When you take a reasonable salary, you have to put yourself on payroll and take a W-2, and the business would be paying half of the payroll taxes to the IRS and to the state of California for that matter. However, whatever is left over is taxed at a lower rate. So there's a possibility that you may save on taxes by electing Subchapter S tax treatment. Again, you need to go to a professional like GB to work these numbers out to be sure it's appropriate for you. There is a fee paid to the state of California for having a Subchapter S corporation or electing Subchapter S tax treatment. Minimum fee is $800 or 1.5% of net income, whichever is greater. I've gone through this example before. This is an example where somebody had a Subchapter S Corp, somebody had an LLC, and you can see after taxes, the person who had the Subchapter S Corp, all the other things given equal, had a tax savings. But again, I made a bunch of assumptions in this calculation. Talk to a professional before you make a decision about tax treatment. C corporations are subject, basically it's a general stock corporation that has not elected Subchapter S tax treatment, and you're subject to double taxation. That is a major disadvantage. However, there could be other advantages associated with C Corps. And once again, talk to a professional about what makes sense for you. There's something called professional corporations. Certain professionals can't form LLCs. They can form something other than an LLC. Oftentimes attorneys, CPAs, et cetera, will form PCs or professional corporations, and they can elect Subchapter S tax treatment. B corporations, stay away from them. GB, do you have any B Corps?
Only 2.
Yeah, for a reason. Because there's too much to do. You have to do a third-party assessment. You have to do a benefit enforcement proceeding. It's just way too much burden associated with B Corps. I have one.
If you have an investor backing you up and you need that PR recognition, then yes, go for it. A small business owner, the compliance is a killer.
Yeah, it's not good for a small business, okay? Because it's hard enough running a small business. Why make your life more complicated? So my recommendation is stay away from B Corps. If you want to support a nonprofit, do it. Or create a separate nonprofit and support it from your profit, do it. Treat the people on the planet properly anyway. Should be doing that.
And may I add one thing real quick, if you don't mind, Mike? Everything that we're sharing is only for California entities.
Yep.
Because if you go to New York, they do allow professional LLCs. So I know right now there's a big migration we're seeing in the country, people moving across state lines. So if you move your business from California to New York, there could be a whole different entity that you may have to set up, because what California allows, New York may not, and vice versa.
Yes, that's correct. So you see on the screen, professional limited liability company, that is not permitted in the state of California, as GB said, but PCs are. Professional corporations are permitted. So don't do a B Corp. Special purpose corp, it mixes a for-profit with a nonprofit mission. Again, it's different worlds. Why complicate your life? If you want to set up a nonprofit, do so. Set up a for-profit and have the for-profit feed the nonprofit, or support a nonprofit. But running a business is hard enough as it is. Why complicate matters? That's my opinion. Close corporations are meant for families. You can tell because spouses are considered to be a single shareholder. Lots of advantages to close corporations. Don't have to have annual meetings. Don't even need to have directors and officers. A lot less formalities. If you have close family members, it's something to consider. You can elect subchapter S tax treatment as well. Again, I'm going to do this quickly because I went through this before. So it's just a reminder. Partnerships. Oh, GB, you want to talk about partnerships?
The biggest risk is whatever your partner does, you personally have unlimited liability. You cannot say, well, I had no idea what he or she or they were doing. Doesn't matter. They do anything in the partnership's name, they're doing it under your name. So there are some cases where general partnership makes sense, but very few cases.
Yeah, I don't typically recommend a general partnership because of what GB said. And have a partnership agreement in place at a minimum. Okay, limited partnerships. This is typically used by lawyers, accountants, engineers, architects, because you can't form LLCs. Actually, I take that back. A limited partnership has a general partner. The general partner would take on all the liability. A limited liability partnership would be used by accountants, lawyers, etc. So the general partner might be a developer putting up a condominium complex, and the investors are the limited partners. And limited partners do not have any say in the day-to-day decisions. If you have an opportunity to become a limited partner, you might consider it, but remember, you don't have decisions. You don't have decision-making authority. Because the general partners face unlimited liability, I don't recommend that you be a general partner unless you have a means to fully protect yourself against lawsuits. LLPs. You want to talk about LLPs, GB? I don't know. You an LLP?
No, I'm not. But limited liability partnerships, they are, and just another way for professional who cannot set up an LLC, they usually go the route of the limited liability partnership. So it's just another way for professionals who don't want to set up a professional corporation, they cannot set up an LLC, they go down the route of limited liability partnership. And a lot of times, it depends upon the compensation plan that the partners are seeking. So if you have the corporation, if you do the professional corporation, you get a certain compensation plan. But if you do the limited liability partnership, you're seeking a different compensation plan. That's the main difference in the decision making.
Thank you. We're in corporate. We've talked about this. If you incorporate in a different state, form an entity in a different state, you cannot escape paying fees here in the state of California. You would have to register as a foreign entity here with the California Secretary of State, pay a fee here, and also pay a fee in the state that you incorporate. So unless there's a significant reason why you would do that, I suggest you just incorporate here. Otherwise, you're going to be paying fees in both states. Now, if you set up an office in a different state, then you have to register with that state as well. Anything you want to add to that, GB?
Absolutely. When people often ask me, where should I set up my entity? I always ask them, what is your exit strategy? If you just want to run a small business, incorporate in California, if you want to sell your business, then we can talk about different states. If you want to go public one day, then maybe Delaware will make more sense. So it all depends upon the exit strategy and also how ambitious you are, how big you want to grow.
Right. But keep in mind, you're paying fees in every state where
And
you
you're
have
filing a tax return in every state. and you may be subject to sales and use tax and the payroll tax return. So it's not just one tax return. I have one client in 5 states, and we file about 60 tax returns for her every year because of the variety of exposure. So you may be tempted to go incorporate in Nevada, or Wyoming is very popular right now, but only for the right reasons. Otherwise, your compliance will eat up your profits.
Thank you. You mentioned Delaware. Most people would go there. You're right. If they have investors, they might insist on it, but still have to pay fees here. Or are you going to go for an IPO? There's particular reasons why they do it. Delaware is set up in a particular way to best serve public corporations and other very large corporations. There is a process by which you go through to incorporate, which I'll go through. You have to obviously have a name, business purpose, and there's various forms that you have to fill out or have available. Registered agents. GB, I think it's important to mention registered agents.
Yes, every entity must have a registered agent who is responsible for receiving any and all correspondence from the state. Now, this is not to be confused with the secretary of the corporation. They're two separate roles, and the registered agent becomes even more important if, for a legal or a tax reason, let's say a California resident wants to incorporate in Delaware. They need an individual or an entity in Delaware to be responsible for the correspondence between the entity and the Delaware Secretary of State. So in those cases, a registered agent is more important. A lot of times, people say, can I serve as my own registered agent? If you are a resident of that state, yes, you can. So if you set up a California entity, you can be your own registered agent. But be mindful that you will receive a ton of mail, especially a lot of spam mail. And this is why sometimes some people use a professional registered agent to have some level of privacy, but they don't have any legal responsibility. They have some legal responsibility, but they're just your agent to be the go-between between the entity and the state.
Yes, the cost for a registered agent, by the way, is not all that significant. I paid $35 a year for mine. If you're paying more than $100 a year for a registered agent, I think you're paying too much. Yeah, okay. If you have a corporation that's not a nonprofit, you're issuing shares of stock, you have to set forth the number of shares of stock in the par value. Par value is the nominal value of the shares of stock that you designate when you set up a corporation other than nonprofit. So it could be $1 as the par value. And if you have 1,000 shares, then you've identified your initial value of that stock at $1,000, $1 per share. That's what par value means. Some people use a penny, some use $1, some say no par. I don't agree with that no par designation. How about you, GB?
I've seen that happen when somebody is incorporating in a state that puts the franchise tax based upon the par value of the stock. So like Delaware is very notorious for that. California, so this is where every state also has a different franchise tax that is levied differently. So that's where I see sometimes a no par value, or maybe even a penny. But yeah, I agree with you. I don't agree with no par, but a penny is better than no par.
Right. Some corporations are authorized, can issue preferred shares, not required to. Remember, subchapter F Corps cannot. That's important because investors often want preferred shares because it gives investors preferences. That's why they call it preferred shares. Preferences possibly over dividends, preferences upon liquidation, preferences on voting rights. So if you want to draw in investors and they insist on having preferences, then S corporation may not be appropriate for your structure. An LLC might be okay, or a C corporation might be okay. When you have a corporation, generally you have to have a board of directors, and you have to name those board of directors. It should be a minimum of 3 because you need a tie-breaking vote. And oftentimes directors are asking for some sort of compensation or equity in the corporation to serve on the board. And corporations are run by officers. Now you can be an officer of your own corporation, but you need to name officers. But you need a, was it GB, what are the office secretary?
The 3 required by the state are the president, the secretary, and basically the VP of finance or CFO. Those are the
Treasurer. They
three.
call it a
Yeah,
treasurer. Yeah.
treasurer, yeah. And may I
Right.
add something to it very
Sure.
briefly? Whether you are a corporation of one or a corporation of a million, the shareholders elect the board of directors. If you're the only shareholder of your company, you elect yourself, maybe to the board of director. And the board of director elects or appoints or hire the officers. And the reason why it's so important, because each one has a very different fiduciary responsibility. The responsibility of the board of directors is to hire competent officers with one responsibility, which is to increase the shareholder value, because the board of directors are accountable to shareholders, whether you are the one shareholder of your company or whether you are running a Wall Street company and you have IRAs and 401k money, because nobody wants to see their 401k money drop. So the reason why I bring it up is, even if you have a corporation of one, understand the fiduciary duty you have to the state, to the tax man, and to everybody else, especially if you are looking for your mom or your dad or your friend to invest in your business.
And it's formal. You need to document it, keep minutes, even if it's just for yourself, keep a record of what your decisions are. Otherwise, if you're dragged to court for some reason and you can't show that you're acting in a formal manner appropriate to a corporation, you may lose that status.
And that's very key, because I have a client right now who is in lawsuit because his dad invested in his business. The dad had an untimely death, and now the stepmom is suing him because she's claiming you were not a good fiduciary with our money. So always, and I know it's a controversial thing, but the board of directors' responsibility is to the shareholders, nobody else. And then there are other tiered responsibilities. So if you are raising capital, even from family, sometimes relationships go sour, so be very mindful.
Yes. Now, LLCs are different. You don't need a board of directors. You should have a board of advisors, and LLCs are managed either by the members are owners of LLCs, or by managers. It's important to understand the distinguishment between members and shareholders. Members refer to LLCs. Shareholders or stockholders refer to corporations. Keep that difference in mind. So, because when you fill out paperwork, you need to understand what the term member means, or managed means, manager, because the request on the form says, is it member managed or is it manager managed? There's all sorts of compliance requirements depending on the type of structure you've set up. Key ones is filing your returns on time, keeping the minutes if it's appropriate, et cetera. Just maintain proper documentation for everything you do. And GB, I'm going this kind of quickly because of time constraints. So although LLCs don't have to meet the formalities, doesn't mean you shouldn't. Right? Go ahead,
Absolutely.
GB.
No, absolutely, because at the end of the day, you have a legal responsibility to someone somewhere. So they are called members because they eliminate it's kind of like a partnership. That's what an LLC is, a legally protected partnership. So this is why there are no board of directors. And this is why LLCs are usually smaller than a corporation, because you can imagine Tesla is a huge corporation. So if you set up a corporation, your exit strategy will define that. But in an LLC, the members of the LLCs are appointing a manager to manage their affairs. So there's a fiduciary duty and a legal duty there. So whatever entity you choose, be mindful. And what upsets me is when people walk in my office and say, oh yeah, I listened to a podcast or I read a blog and they say LLCs are cheaper and easier, so go with an LLC. Maybe, but your business plan and your ambition should define what legal entity you choose, not a podcast. And it's just like easy is not always cheap. You want to go buy something easy, 7-Eleven, go buy a gallon of milk. You want a better price, go to Costco, stand in a long line.
Right. Exactly. So the members should have meetings. And there should be a formal document in place, sometimes called an operating agreement, sometimes called a membership agreement. Shareholders have shareholder agreements. Partnerships have partnership agreements. Those agreements define the roles and responsibilities, how the organization is going to be run. Oftentimes they include buy-sell agreements, which is the on-ramps and exits to the businesses. don't go to one of these incorporators, don't go to LegalZoom, go to a professional business attorney that will customize the agreement to your particular needs, especially if you have more than one owner involved in the business. You want to jump in on that, GB?
That's a very great point, because if it's just you, you're not going to sue yourself most likely. But when 2 or more people get involved, this is what I remind my clients. When everybody's making money, all is forgiven. No big deal. Trouble starts when somebody makes a decision contrary to your vote, or when people start losing money. So the operating agreements, the buyout agreements are essential because they are to protect you when things don't go according to plan. They're like the prenuptial agreements. When you're getting married, everything is rosy. When things don't work out. So this is why having a proper attorney, and here's the thing, it's not one and done. Business plan changes, expectations, members and partners' personal finances may change. So the member agreement, the operating agreement, the buyout agreement may need to be updated periodically. Maybe one of the members or partner gets married. So there are always these life events that may require you to revisit, pay the attorney the proper due to revise these agreements.
So oftentimes I hear, well, I can just go pay, $100 and have it done. No. This is a 6-7 figure decision over time. So pay for the right advice up front. If you're building a house, you go to an architect. You pay the architect what he or she is worth. This is the foundation for your business. Pay the, yeah, go ahead, GB.
No, I was just going to say that it depends upon your partnership, right? If you and your partners are just like high school buddies and you just want to go to McDonald's and talk business is one thing. But if you are courting a high-class partner or investor, you would take them to a steakhouse. So I always tell people with $100 advisor, you will get the McDonald's experience. But if you want something higher, you got to pay $60, $70, $80 for the steak that you could probably get at, I don't know, Chili's for maybe $10 or $20. So you get what you pay for is basically what I'm trying to say.
Right. Great point. If you don't comply, I'm going to go through this briefly. If you don't meet formal requirements, or if you engage in fraud, criminal activities, then there's something called piercing the corporate veil. It means you can be sued and brought into court and lose the protections against unlimited personal liability. It's called piercing the corporate veil. That also can occur if you act as you're a sole proprietor. And that happens when you miss business expenses with personal expenses. It should be a business bank account that you set up after you set up an entity. And do not, GB, you can speak this better than I can.
Absolutely. It all, again, boiling down to the fiduciary responsibility. If you are commingling your finances, the tax agency or anybody suing you or anybody may want to go after you personally may claim that you have used your entity, LLC, corporation, LLP, whatever you have set up, you have used your entity as an alter ego, that there is no difference between you and the entity, and thus it allows them to pierce a corporate veil and go after you personally. And it's not just what you own right now. They may get a judgment and claim against your future income and your future assets. So it may hamper whom you may end up marrying because somebody doesn't want to commingle the property with you. So it can have lasting effects on people's finances and personal and social life.
Yes, and if you fail to pay your fees to the state of California, your entity will be suspended, which means that you will not be able to defend yourself in a California court, or any court for that matter, against a potential lawsuit. Now, there is a process for reviving it, but it's not easy. It's not simple, right, GB?
That is true, and it's expensive. Sometimes they want you to get in compliance before they will give you an immediate activation, or if you get sued, the state of California will charge you, I think, what, $200 a day if you wanted legal protection. That can add up very fast. That's $4 to $5 grand a month that the state of California will charge you to give you your legal protection if you get sued. So if the lawsuit goes for a year, that's $40,000 to $50,000 that you're going to pay just the state of California for a temporary status.
And it's not just paying the annual fee. It's also if you fail to provide the statement information, which is, I think it's $20. It goes to $250 if you don't meet it on time. Then if you continue to fail to submit it, your entity may be suspended. I think it will be suspended.
And actually, here's the kicker, Michael. Mike, it used to be that you could skip an SOI for a couple of years and they would not even care.
Right.
California, for the last 2 years, have been very aggressive with this SOI. And they have just upgraded to a brand new system 4 weeks ago, where it will tell you what the deadline is for your SOI. And if you fail to comply, it will send you an automatic penalty. So California is getting far more aggressive in enforcing these compliance issues, which are easy to comply, cheap to comply. Otherwise, it's very expensive to get back into compliance.
Thank you. For those of you who are working as sole proprietors, you don't have to set up an entity. It's not a requirement. It's not mandatory. You may want to do it to protect yourself against unlimited personal liability, but it's not mandatory. But if you're going to do business in a name other than your own, it is mandatory for you to register a DBA, otherwise known as a fictitious business name statement, FBN. Or if you set up an entity and you're going to do business in a name other than the name of the entity, then it's mandatory for you to file a DBA. Now, all this is done online now. It's through the LA County voter registration site. There is a form here that you can fill out, but almost everybody does it online. You print it out, you bring it to a notary, have it notarized, send it back to the county. The county sends you a list of publications, and it's published like you see here. So don't go to the LA Times, Daily Breeze, go to one of the local newspapers like this one. It shouldn't cost more than $100, $150 to have this done totally. Remember, you have to pay the notary, pay the county, pay the paper. The paper will submit the proof of publication back to the county, and then the county, it says it's good for 5 years. And that's how that works. But before you do that, make sure you get the name, make sure the name's available to you. And there's various places you have to check for the name. There's the LA County Registrar site. There's the California Secretary of State name search. There's the California Trademark Search portal and the US Trademark Search. And of course, do a GoDaddy search to see if the domain's available. Want to add to that, GB?
Absolutely. People ask me, why do I need to do this? It's basically you're applying for an ID. I'm GB Bajaj. My ID says that if I go to a bank, I give my ID, I give my social security card, I can open any checking account anywhere in the nation. You show up and say, hey, I'm starting a business and it's called GBBBB. Well, there is no ID that says that except for the DBA. So a DBA is basically the county giving you an ID to doing business as. This is where you may want to do an EIN. And Mike, I'm glad you brought up searching multiple portals, because the county will not do it. Because you may get a name that is with LA County, but somebody is already registered that in Orange County or San Bernardino County. So this is why the GoDaddy search is important, because somebody already has that name in a different county.
Yeah.
They may have a website for it. And if they do, and you get the DBA, you start doing business and they may sue you for a trademark infringement, even though they may not have, because sometimes people say, I can just go get a trademark. That's true, but they may litigate that even though you got the trademark, they have been using the name longer than you.
They use it first.
You could have paid 10 grand to a lawyer and now all that money down the drain. So at least do a GoDaddy search, and I'm glad you brought that up.
Yeah. All right, so we have a question from Jesus. He got confused when we said that the LLC does not have that many formalities. I'm ready to open my LLC, but I want to be taxed as a C Corp. Do I have to follow all formalities as a C Corp, like meetings, even if I'm a single member LLC? You want to take that one, GB?
That's a very good question. You are only choosing to be taxed as a C Corp. So the legal formality may not be there, especially if you are being a single member LLC. Now, sometimes I remind my clients, just because you don't have to do something, you may want to still do it, because my first question to you would be, why are you being an LLC taxed as a C Corp? And there are some valid reasons. So I hope and pray you have the valid reason. But from a legal point of view, you are an LLC, but from a tax point of view, you're a C Corp. So you may not have the same formalities. You don't have to elect board of directors. And with the state of California, you will still file your SOI as an LLC owner.
I think he was referring to being taxed as an S Corp, not as a C Corp.
Okay, if you are being taxed as an S Corp, then again, it's still a tax designation, but you will still, for legal purposes, you are still an LLC and you will operate as an LLC.
Thank you. There is this form called, so LLCs are formed by articles of organization. Corporations are formed by articles of incorporation. Partnerships are formed by articles of partnership. So this is the paper form that you would fill out for an LLC. It's called an LLC-1 in the state of California. Other states have different forms. It costs $70 up front. You can see on this, maybe you can't, you can't have a PO box for a business address. It must be a physical address. And down below is a registered agent box. It's a relatively simple form to fill out, but it's not the membership agreement. It's not the operating agreement. It's just a form. Get the agreements done first before you decide to check the names, determine if you're going to need a registered agent. Okay. And I've given all the links here in this presentation to, but you can look them up as well. So it's $70 if you do this year. In other words, the fee hasn't been raised in a number of years from what I remember. But there's some, this is a statement of information we're referring to. The LLC has a statement of information that you need to file. I think it's within 90 days of the registration date of the entity, and then every 2 years for an LLC, and then every year for a corporation. You want to talk about these, GB?
No, you got them right. And this is what I remind my clients. Sometimes they tell me, well, GB, why do you have to come to you or go to your lawyer? I can fill out the form myself. It's not the form.
It's not the form.
It's the workflow and the legalities. And even if you're a single member, LLC, or a single shareholder, depending on what you're doing, having the proper bylaws and having the proper tax elections, because there are provisions within the tax code that you can start a business with $10,000, and by the time you make $100,000, you may pay zero in taxes. But if you don't make the proper and the state of California or New York or Hawaii will not tell you that, because it's a tax question. Just like if you have a legal question, you will go to Mike. So the forms are simple. The compliance is simple. It's everything behind the scene that is complicated. And that's where Mike and I and others like us who are properly trained and educated help our clients succeed, not just the paperwork.
Right. So this form is due, costs $20 within 90 days of the formation. And GB mentioned what happens if you don't meet that date. To being very aggressive.
They're being very aggressive now, so don't mess with it. And again, the reason I bring it up because some of us have been spoiled by our past habits. Like, oh yeah, I'll get to it. Oh yeah, I've missed this year. Don't worry, I'll just do one filing for 2 years. Don't do that anymore.
No.
They will penalize you. They will suspend you.
Incorporations every year.
Yes, they will suspend you.
Yeah, exactly. So this is the Articles of Incorporation for a general stock corporation. That's what most people think about when they think of corporation, but remember there's different types of corporations. It's just a form. It's not the shareholder agreement, stuff we talked about. It costs $100, okay? And again, this can be done online now. But GB referenced earlier that with a corporation, you have a board of directors, and the board of directors appoints the officers. And that's what this graphic is about. It's chartered by the state, the board operates apart from its owners. It's a separate legal entity from its owners. Okay, the corporation operates apart from the owners, and it's a separate legal entity, as is LLCs and other entities. I'm not going to go through all of this stuff. There's various portals you can go to get these forms, to fill them out, etc.
May I add one thing real quick, Mike?
Sure.
One thing that happens a lot of times, anytime, whether you or somebody else, you set up a corporation, LLC, you will be bombarded by spam, snail mail, telling you, oh, you have a corporation, congratulations. We are the legal compliance, this and that, and you have to pay us $200 or $500 to do this. Don't fall for that. So keep that in mind. Check with your lawyer or your accountant before you pay anybody, because most of those are spam.
It's a spam. Right. There's different forms depending on what you're going to set up. So General Stock Corporation, the form is ARTS-GS. But for professional corporation, it's ARTS-PC. So make sure you're going to use the right form if you're going to do this yourself. Now, if you have a corporation, you do need to have a board of directors meeting, an initial one, and I think minimum once a year. And there's certain things you have to do at the board of directors meetings. You have to keep minutes, issue stock, select a bank, adopt by. There's all sorts of things the board has to do. It's very formal, and don't think you can avoid these formalities. You can't. These are things you need to maintain. So don't form a corporation unless you intend to meet the formalities.
And may I just add, these formalities exist because you're giving birth to a legal taxpayer, but that taxpayer is just a piece of paper. So these minutes, these resolutions are necessary that you as a fiduciary of this piece of paper are doing everything properly. This is why many corporations, even small from the SBDC who got the EIDL, the SBA required you to submit a resolution that you and your board of directors and the officer, which is all you maybe, came to a resolution that yes, we should encumber this corporation with $250,000 or a $25,000 EIDL loan, because you are putting that liability on this taxpayer, which is your corporation. This is why these legalities are there.
Thank you. Now I want to point to this. Federal law exempt private offerings, which is basically inviting investors, friends, family to participate in equity of your corporation. But to do that in the state of California, you have to file a form. You can't just offer the shares to someone and say, come on in. There's a formality associated with that. Have you run into that, GB?
Yes, I have. This is especially true if you are not related. Or sometimes my clients come to me and say, hey, GB, I'm starting a company. Do you know people with money who want to invest with me? The California filing is, I think costs like what, maybe 25 or 50 bucks. It's very nominal cost. But basically you're telling California that I am doing a small private offering and I'm doing it to people that I know or the people that I know through a trusted advisor. So such as an accountant. And this is necessary because if you were to build the next Tesla, you have to register before you can offer stock to the shareholder. You have to register with the SEC. Smaller companies have to register with the state, but if you are very small, they just even don't want to bother with it, but they want you to be compliant in filing this limited offering exemption.
Thank you. We have a question. I'm already an LLC. Can I become an S corporation in the future?
Yes, the answer is yes, if you meet the proper qualifications. And any entity, partnership, LLC, C Corp, they have until March 15th of any subsequent year to elect to be an S corporation for that year. So let's say if you started your LLC 2 years ago, and you want to be an S corporation this year, it's too late because we're beyond the March 15 deadline. But if you want to be S corporation effective January 1st of 2023, you can do the filing now, or you can do the filing by March 15th of next year to be an S corporation, starting with the future tax years.
I want to clarify the language a little bit. You're not actually changing your legal structure. You're changing your tax structure. So what you're actually doing is electing to be taxed under subchapter S of the Internal Revenue Code.
Exactly.
Yeah, GB?
Absolutely. An LLC can be an S corp, or partnership can be an S corp. So legally, you are that. Tax-wise, you are electing to be an S corp. Even a single member LLC can be an S corp.
Now, if the question is, can I convert an LLC? Well, I want you to answer that question. Can someone convert an LLC to an S corp to an actual corporation?
That would require for you to file with the state to first allow, it allows you to be converted out of an LLC to a corporation. And then you can have the corporation elect to be an S Corp. If you want to change the legal, so anytime you want to change the legal structure, you have to go to the state that give you that charter. In this case, California, maybe because you're a California resident. And if California allows you, and sometimes be careful, because if you've been operating as an LLC, maybe LLC partnership, maybe LLC single member LLC, and you convert to a C Corp, there could be tax ramifications. So, and also if you have any property within the business entity that has any financing on it, there could be consequences for that. If you have the EIDL loan, you may need to get consent from the SBA as well, because it's no longer just your company, other people have invested in it. You need to inform everybody as a fiduciary of the corporation.
Thank you. So we've been talking about how to make an election be taxed under Subchapter S of the Internal Revenue Code. You want to talk, I realize you're talking a lot more than you anticipated, but you want to discuss this form?
Yes, so this is a form 2553 that any entity that wants to be elected as an S Corp must file. And this has to be, if a brand new entity is electing to be an S corporation, they have 2.5 months from the inception date or the date that they start the business, because you may have incorporated in March, but you didn't really start the business till October. So your 2.5 months may start in October or when you issue shares. So whichever one comes first or whichever one comes later. The 2553, you can also choose your fiscal year. Now, if you choose a fiscal year, you have to file a separate form. But this form can be simple or it can be complicated, depending upon, are you just choosing to be an S Corp? Are you also making an election to be a different fiscal taxpayer? So maybe you don't want to be a calendar taxpayer. Also keep in mind, there are provisions where you could have a late election. So sometimes people think, hey, I'm setting up a corporation, I'm just choosing to be an S Corp. If you don't do the proper filing, there are provisions that allow you relief for late filing if you meet certain criteria. So this form 2553 can be very simple or very complicated, depending upon what wishes you are expressing to the IRS. And once the IRS gives you the consent to be an S corporation, California conforms automatically.
Right. And you're going to see on this form, you are required to list each shareholder and stockholder, number of shares, et cetera. So this form needs to be filled out properly. You can't skip fields if you don't feel it's, if you don't want to keep that, if you want to keep that information private, you can't. You need to fill it out completely. Okay, let me continue on from there. EIN numbers. So there's a process by which you follow in order to establish an entity. Determine the name, make sure the name's available, maybe form an entity, right? Next step would be to submit a form to the IRS to obtain an employee identification number. You can see the form number here. It's an SS4. This can now be done online as many of the other forms. It doesn't cost you any money. The election to be taxed in the sub S of the Internal Revenue Code, that doesn't cost you any money either, okay? But this is important. You're actually required to do this. If you have employees, you're required to do it. If you have a corporation, you're required to do it. It serves as a social security number for an entity. So proprietors can do it, and I suggest they do. You want to explain why sole proprietors should do it? You're muted, GB. GB, you're muted.
Okay, there we go. It gives you anonymity because even as a sole proprietor, you will fill out W-9s when you serve as an independent contractor with people you do business with. So you have to ask yourself, do I want to share my social security number with everybody I do business and risk identity theft? Or it is better for even my sole prop to get an EIN number. Also, if your sole prop hires employees, then you may be required, and actually you are required to get an EIN number. So those are the two major reasons why a sole prop may elect to get an EIN number. And remember, if you change from an LLC to a corporation, not the S Corp election, if you change your legal structure, you need a new EIN number. If you are buying somebody else's business, people do this all the time. They buy and sell businesses. If you do that, you as a new owner should get a new EIN number because somebody's taking a personal responsibility. That's why on line 7A, it says responsible party. You don't, if you're selling your business, you no longer want to be responsible for that business's taxes and financial affairs. So you may want to stipulate that the new owner get a new EIN number.
Thank you. Let's address a couple of questions, GB. Breeza of Riza, let's try to pronounce her name, has a single member LLC. Can she hire someone to take on this tax information? And if so, is it cost effective in your opinion? And where can I find these people for assistance? I think she just basically needs a tax preparer.
If you need just a tax preparer is one thing, but if you are an SBDC client, if you're looking for opinions and if you're looking for advice and consultation, we have many qualified SBDC advisors who may be able to help you. So it all depends upon what you're seeking. And if you are an SBDC client and you need a tax preparer, we can also, because anybody who's an SBDC client cannot be my client. So, but I can always refer you to other people who can serve as your preparer. So depending on what you're seeking, SBDC is a great resource for that.
Kenneth is the founder of a nonprofit 501c3. By the way, there's 501c6. There's all sorts of nonprofits, okay? His secretary has died. Sorry to hear about that, Kenneth. Our condolences. He is presently the only officer. Can he wear 3 hats? I think he's referring to the 3 titles.
Yes, you can. You may. You may not want to, but if you must, you may.
Okay. Let's continue on. All right, the EDD. I'll go through this briefly. Every employer in the state of California is required to register with the EDD. If you're not comfortable filling out forms and dealing with the Employee Development Department, you can engage a payroll service or a tax preparer, CPA, that can handle this for you. But this is mandatory. It's not a question of should I, you have to do it when you have employees. And keep in mind, most workers in the state of California must be workers under AB 5 unless they meet an exception. So I'm not going to go through all of this. If you want to do it yourself, there's a way of going to the EDD website. They have employer services to set it up. Easier than just go to a payroll service. We're running out of time here, GB, so I'm going through this kind of quickly. Here's the links. It's employer services at the EDD website. But again, a payroll service can help you do this. Every employer in the state of California must carry workers' compensation insurance. That's mandatory. That's taken very seriously. You want to address that one briefly?
If you don't have it, you will be facing stiff penalties and your future rates will be exorbitant.
Thank you. And I think it's punishable by jail.
It is. Payroll taxes, you don't want to, payroll taxes and sales tax, you don't want to mess with them. These are trust fund taxes and they will put you in prison if you are caught to be egregious enough. So if you just made an honest mistake for a couple of months, that's one thing. This is why, Mike, I agree, get a payroll service because you don't want to mess with EDD. Their penalties are expensive and they can put you in jail.
Right. Jesus wants to ask, can he form his LLC and choose to be taxed as an S Corp if he is not a US citizen or if he's a legal alien?
As long as you file taxes as a resident of the United States of America, you can file as an S Corp.
Thank you. Sales and use taxes, the California Department of Tax and Fee Administration, the CDTFA, governs the filing of returns and the issuance of sales permits to businesses that sell products in the state of California. This is mandatory. It's not a question of should I. And by the way, they have means of finding out whether or not you filed because the city talks to the state talks to the city, because remember the sales and use taxes, some of it flows back to the cities. There's a form you fill out at the CDTFA. And then once you fill out that form, you get a seller's permit, which looks like this. And then from that seller's permit, you can create a resale certificate, in which case you don't have to pay sales taxes to your suppliers. And oftentimes you'll get a wholesale discount. You want to talk about how, the form there's a form we filed to record the sales taxes you've collected.
Correct. So there's a separate tax return that you have to file either annually, biannually, quarterly, or monthly, depending upon what your gross revenue is and what your taxable gross revenue is. It's not even just the gross revenue, but once you do so, you have to file it every period, and you are once you get a seller's permit, you are basically an agent of the state. You're collecting taxes on their behalf, and you're remitting it to the state of California. And this is why state of California and many other tax agencies around our country are so unforgiving, because they are claiming, hey, small business owner, we're not taxing you. We're just asking you to collect this from the consumer and hand it over to us. So if you fail to do so, there is no forgiveness. So penalties are harsh and forgiveness is scarce.
Thank you. The rest has to do with business permits. If you're in a jurisdiction and you don't have a business permit, go get one. Because if you don't, you're going to be subject to fines, penalties, possibly. If you're in an unincorporated area like LA County, these are all unincorporated areas, the county handles it. Not every occupation, profession, industry in an unincorporated area requires a permit. These are some of them. These are actually all of them. But it's always best to check, because if you don't have a business permit, again, you're subject to fines and penalties. So and then this, I don't want to get into property taxes, GB. That's a discussion for a different day. Okay.
I got to take off too, actually. I got a meeting coming up.
Right. So I want to thank everybody for their time today. Really appreciate it. GB, I hope you feel better. And next week, we'll talk about SBA loans.
Yes, correct. Thank you, Lauren. Thank you, Mike.
Right. Thank you, Lauren. Bye now.